Hey there, good morning. Thanks again, everyone, for joining us for day one of the Wells Fargo TMT Summit. I'm Michael Turin, software analyst here at Wells. We're really pleased with our next session this morning. We have Amplitude, Wong Bung, CFO of Amplitude, with us here today. Should provide a very fruitful conversation. I'll start off with some questions. If anyone does have anything they'd like for me to ask, you can shoot an email over to michael.turin@wellsfargo.com. Happy to sprinkle those into the conversation as well. Wong, thank you for joining us here virtually. Appreciate the time.
Thank you, Michael, for having us.
Excellent. So, there's a lot we could cover and attempt to in 30 minutes, but maybe we can start with just the process of going public. The company chose a direct list approach. It's a little unconventional, but we're seeing more technology companies use it. And so maybe in terms of how you describe the process, receptivity since then, and just the journey towards the public markets and helping characterize.
Yeah, I think as we kind of learn, there's multiple different ways to go public. I don't think there's actually call it a right or wrong way. I think it's just all really depends on the companies and what their goals are. For us, many people were surprised that we kind of took that route because the direct listing is more done for your traditional kind of B2C or much more well-known names and that. But we felt that what's gone on with software as a service and SaaS and the type of investors that are in there and the story that we had to tell, that we would still have a really great outcome doing a direct listing. And I think we've shown that you can actually execute a very successful direct listing doing that. And I think it was a great process because it allowed us to kind of get our story a lot sharper, go out, and we were still able to meet and talk with all the different investors that we wanted to meet. And the investors that ended up investing were also the ones that we wanted to get in. So it's been really great progress.
That's great. Just for the overview, for those who don't know, you sort of characterize a lot of times with the direct list, it's more the B2C household name. Amplitude, I think many of us know the logo, but may not understand or appreciate under the covers all that's happening there. So just in terms of setting the stage and the overview, how would you characterize it for investors who haven't done all the work yet?
For what Amplitude is, So we kind of creating a category that we call digital optimization. So if you think about digital transformation is kind of what the last wave or current wave is, we think digital optimization is the next wave. So now you've gone and you move your product to be digital, or if you're already a digital native, you have a digital product. Well, if you look at all the digital product, how have they really grown? Whether that be, think about Facebook, Amazon, Netflix, they've grown because they actually kept building a better and better product by understanding the users and that user experience. And our belief is not every company is going to have the bandwidth or the core competency to make that platform so that they can understand their users and how the users are using their products. And that's what Amplitude provides. So Amplitude provides a platform that allows you to continuously optimize your digital experience and your digital apps.
You have some pretty impressive large customer logos as well, even though you kind of gave the caveat that, hey, not everyone is Amazon and can spend that much time with optimization. So, I would just ask what works in terms of upmarket that has helped Amplitude land with some of the larger customers as a starting point and lead to evangelization here.
Yeah, I think you go back to when we started. So the thesis was true in that lots of companies didn't want to build it internally. They didn't want to have that be the core competency. And so companies that we today are much larger. So think about Square, think about Peloton, think about DoorDash, Instacart, and the list goes on. Even on this, and those are some of the obviously B2C payments, but you also have B2B software. So whether it be Intuit or whether it be Atlassian, they chose our platform as a way to kind of really build out what we initially was calling product analytics, right? And so we've evolved and continue to add to that suite. It's expanded from product analytics to the digital optimization. And so I think that they saw that building out that platform and having that wasn't something that was their core competency. It became one of ours. We built basically the best platform out there for that, and those customers have grown with us. So a lot of our customers were very small back in 2014, 2015. And not household names, and because they are digital and product led, they've grown dramatically over that. And then as those early adopters have shown how to use it and how to do digital optimization correctly, obviously then you have additional companies that follow on afterwards that aren't really your digital first company. Companies that like Ford and whether they be the Burger King and Procter and Gamble and other CPG, where they're like, hey, we also need to do a digital product. And so I think we're starting to see that it's not only your native digital first company, but now you actually have new companies that are making that migration. Hey, we digitally transform. Now we need to kind of continue to make that product better.
Yeah, that's really interesting. I mean, one of the things we've observed just from the software lens is that product-led growth got a big boost as a result of the pandemic. I think traditional sales cycles kind of broke down and there was more autonomous buying behavior. Product naturally leads as a part of that conversation. And so one of the questions I was going to ask you and would just be curious to get more thoughts on is just the spectrum of where we're at in terms of product-led growth leading and where that's moving towards. It sounds like you're starting to see some of the more traditional businesses develop an appreciation for that motion too. Is that right?
Absolutely. I think that we see that as a upcoming trend or wave that it's not only let's say folks are going, hey, we need to find a more efficient way than doing the traditional, call it sales, because you need to actually have that part of that growth. But even in marketing, right? If you think about marketing and how noisy that has become, right? If you got thousands of apps or thousands of all trying to bid on the same keywords or doing the same ads, and then what's going on in the ad business today in terms of the privacies and the cookies and all that, like you actually just need to make sure you actually are building the best product out there and giving the users the best experience, because that's what ultimately is going to get them to actually convert, engage, and retain, et cetera, and spread the word. And so I think you're seeing that happen. Like we gave some early example of companies that built real gigantic brands today, and I think more people are going, wow, that's what really is going to work in the next decade, if not the next century. And so we're seeing that as just an early trend.
How do you size the TAM for what you're doing? Because it would seem like this would be one of those potentially imprecise exercises where if you sized it based on spend today, it would look very small. But if you look forward in the future, it could prove equally vast. And so I'm wondering how you assess the TAM and what you use as stats to inform that.
Yeah, I mean, I think we just recently reported kind of like our Q3, and so we're over 1,400 paying customers, but our revenue grew 72% at 45.5 million. If you take a look at those numbers, and then therefore you say, hey, what's kind of like the average ARR by different segment of enterprise, mid market and SMB, and we say, hey, we then assume like our product, even if we got very little of the SMB, because let's say they're going to use our free product, or they're not, they're just they're not going to be like if you're a tire shop, it's not really as appropriate. But then you go into the mid market and enterprise, and obviously those companies will have a higher percentage penetration. So you time that by the median markets, because at 1,400 paying number of customers, that's still a very small number of customers. And so you take that. And then we also we're pretty excited because we just went from a single product to multi-product. We launched 2 new products in Q2 of this year. And so we kind of add a very conservative attach for those new products. And so when we did the analysis, we came up together with about a $37 billion TAM.
Okay. Substantial relative to where you're currently sitting.
Absolutely. Yeah, we have a long ways to go.
Yeah. So just on the business model as well and how you monetize this, it's recurring, but what is pricing a function of? Is there a volume aspect at all? Maybe we can just talk through what the functions there.
Yeah, so there's really basically call it now 3 different elements. There's the first is just the platform element in terms of are you buying an enterprise version or our growth version? What kind of functionality modules are included in that platform? And the big driver is what we call event volume. So think of that as an event as a customer activity that is being then ingested or pulled into Amplitude. And so like our free product, for instance, allowed you up to 10 million monthly event volume, and so which is quite a bit, by the way, right? And so but then you have companies that are clearly in the billions and tens of billions and hundreds of billions of events already. And so you basically are looking at what those events are, and so it's priced based on platform and event volume. And then obviously we're starting to sell multi-product, which also has its own platform and its own event volume and drivers.
So we're simple animals on the financial analyst side sometimes. So we hear a few different companies talking about events.
Yeah.
We hear that on the CDP side. In terms of events, we also hear it on the event streaming side with businesses like Confluent. So is Amplitude complementary to some of those technologies? Can you just help us understand where you fit as part of that conversation?
Yeah, I mean, it's a great question because you also hear that also with some of the call it application performance management, like the Datadogs and stuff of the world too, right? And so I think that if you think about it from a CDP standpoint, which is customer data platform, and think of the Segment, Tilium, and Particle of the world, at Amplitude we're kind of agnostic about how the data gets into us. If you want to use a CDP to bring that data in, great. If you want to stream it from your data warehouse, and your data warehouse may be a Snowflake or a Redshift, great. If you want to use us and our SDK and use us as like your form of CDP, that's also great. And so we're agnostic to how the data come in. We think that like different companies will have different needs, and that's fine. We just want to be the repository where if you're trying to understand your user behavior and try to understand that product usage and how it gets used, that we're your system of record for that. We're where your engineers, your product managers, your growth marketers, your customer success folks are coming in to really understand how are users really using that product, right?
Yeah.
And so you bring the data in, and then obviously there's still performance management. You still want to make sure the servers are up and running. That's kind of like your APM of the world, right? You mentioned Confluent. The Confluent, obviously, they're moving data real time now. Some people go, well, could you use Confluent to move the data into Amplitude? You could, but that's not really the use case per se of that would be pretty expensive a way of doing it, but they're really kind of trying to bring obviously data in motion as Jay would call it. So they kind of bring that data to real time use cases, and then there's all kind of different folks that are looking at also that event data from different use cases. But our main one is really focused around that user behavior. And understanding how we're think about the best way to I always think is like in the old day when you were doing marketing, you were very much focused on page views and clicks, and today people really want to focus around the users and what the activities the users are doing, and that's how we differentiate there.
That's great context. If it were to translate into a metric, it might translate into expansion rate. And so is there a typical way that you could describe the land and expand, what drives the expansion rates and the cadence of those expansion rates for the average customer?
Yeah, so I mean, we were also probably in Q3 we saw an increase in our net retention rate. We went from 119 to 121. And so how do those customers expand? Like we typically are very fine with starting small at a customer, and that what I mean by small is a customer we say, hey, I want to test this, and if they only have one product, it may be only a certain segment of the customer journey, or it may be even an offshoot of a product. And then obviously as they see the value from that, they're going, hey, we want to expand where we're using it. So you may do only the sign up portion, and then later on you may say, hey, I want to understand how someone is really using a certain functionality and feature. And for instance, like one of the example we talk about all the time, or there was, is Peloton, where they came in and they were trying to figure out how to build an on-demand product for workout that has the same kind of interaction as a live session. That's a lot of iteration and learning. And so you kind of want to expand from that new functionality to new product you're looking at. Or like in the case where, we were into, we initially were in at Venmo, and PayPal saw what it did for Venmo. And then they're like, hey, we need to add this to, another product line, another product line, another product line. And so, you kind of add both in terms of use cases and product lines.
This is why we love software. It's just the pick and shovel for everything that everyone sees but doesn't appreciate, right?
Yeah, exactly.
Fantastic. A question in from the audience that I'll loop into the conversation. So it's somewhat tied to some of the things that you've already touched on. But the question is, in day-to-day, how does Amplitude drive efficiency or help drive efficiency between developers, sales and marketing professionals, and product managers? And does this help maybe quantify some processes that have historically been more iterative?
Yeah, absolutely. In terms of like, so let's give an example of like Calm, where the question that maybe that they're trying to figure out is like, hey, how do we increase number of free customers to become paid customers? And so that becomes a question that you have an exploratory. And so there may be multiple people working on that, right? And so what Amplitude allows you to do is have multiple people, not just people who know SQL or not just your data science team, but multiple people accessing that information, looking and understanding those, asking those questions, and then sharing their findings. So they can track it in a notebook. Like I think like one of the more interesting features that I kind of thought about is like, let's say you're doing this analysis. A lot of times you're just playing around, and then at the end of it, you're like, gosh, I found something, but now I don't remember everything I did. Well, what actually happened is like, Amplitude has this thing called breadcrumbs. And so we basically just said, hey, now that you found something, let's create a notebook based on that breadcrumbs that we have, so that you basically track all the things that you just did and then put a package together and send it out, right? And so one of our key metrics internally that we use to track to understand like how users are actually using Amplitude and whether or not they're successful or not is what we call weekly learning users. And what we define weekly learning users as when a user of our product is asking a question, finding something, and then sharing it with at least 2 other people, right? And so, when you're making those findings and then you're sharing it and iterative and it's online, and you can kind of take it there. Because like, how often do you actually ask a question, you get an answer, and then it makes you think of another question? It's rare that you like get the right, right? It's rare that you get like the right question at the first time. And so that constant iteration, the constant being able to play with the data, I think is what makes it, just amazingly powerful.
That's great. How do you approach the go-to-market here? I mean, we've talked about the large customers. There's a product-led element to all of your customers too. So it would seem like you have to tackle both and are both complementary in some way. And I'm just wondering if partners are at all involved in that conversation currently, but maybe you can just walk through the various elements of the go-to-market structure.
Yeah, I think there's all like, as a typical enterprise software company, you get to all 3 eventually, right? You basically will do some leverage of product-led growth on the lower end just to make it more efficient. And that portion is not a huge portion of our revenue. I think we reported like over 70% of our revenue comes from customers with over 100K of ARR or more. But it's still an important element and group for us because those people are the ones that are innovative. Those are the ones that are sometimes they will become your next, DoorDash, Instacart, Square. And so we love having them, and we love having that product-led growth in terms of like signing on a lot of them, even though they're not paying today, and they can grow up. Then obviously, you have our traditional kind of enterprise sales model with your AEs, your SDRs, and your SCs as a sales unit. Going out and landing new accounts. And then we actually break our sales organization between hunters and farmers. So landing new accounts and then expanding existing accounts. And I think that partnership is something that we started investing into probably late the last year and really all this year. It's one of those that we're still early in that journey. We haven't gotten to the part where it's like yielding everything yet, but they take time, because I think what we expect is that there's going to be lots of companies where they're like, whoa, we can barely get our stuff together to what our data is or define what our North Star metric is, let alone kind of start really optimizing. We're just kind of like, we're still in the middle of transformation. Like, don't talk to us about optimization yet. And so I think, partners can come in really handy to help that kind of evolution. It's not very, I started my career in early days of implementing SAP. And I remember you go into a lot of companies, right? And it wasn't like everyone's like, yeah, let's go ahead and tackle it. They're like, hey, bring in a partner. Let's really identify what processes are we trying to make better, and how do we, improve those processes before we actually implement an ERP. It's not dissimilar here that there's that same opportunity with partnership, right? Partners can come in and really help you understand what are your key drivers, what's your data situation look like, how do we get you set up for success when you're really ready to do digital optimization. And so I think all 3 are really important to us. For us, we have a pretty big vision as we talk about the market size. It's really hard. So we want to do product-led growth. We obviously know we need to do the enterprise sales. And partnerships are going to be critical to really going after certain sectors where they need more help than we want to do from a professional services side.
That's great. You printed earnings not too long ago, earlier this month. I don't know that everyone who's tuned in has full appreciation, so maybe I'll give you the opportunity to just walk through some of the highlights in terms of metrics, what you would highlight for investors that came out of Q3, and then I might have a few follow-on questions on the back of that as well.
Yeah, sure. We reported really a strong revenue growth of 72% year over year, hitting 45.5 million. We also showed accelerated, new customer growth, or ending customer growth. We grew 54% year over year versus the prior quarter of 51%. So we were over 1,400 paying customers. And we also reported an increase in net retention rate from 119 to 121.
With that growth, the $37 billion TAM that you laid out, how do you as CFO think about margin progression and manage between those two? I think there's often just focus on growth that, as the first priority. And I think it's rightfully likely the first priority here as well, but you're showing margin progression. So how do you kind of balance those dynamics for Amplitude?
Yeah, so I'll break that into two pieces. One's on the gross margin side and one on operating margin. So we can talk a little bit about both. On the gross margin side, we, when I first got into Amplitude, we're in like the low 60s actually. And, we've now gotten up to like 70, 71%. And, we gave a long-term outlook on our investor day of kind of targeting 75% or more. And so I think that like we have that opportunity because obviously as you grow and scale, you'll get some of that scale from being larger because our biggest cost is call it cloud hosting and stuff like that. But there's other piece which is obviously as we add on additional additional value, we'll be able to leverage that same data that's being ingested so that you actually have that synergy too. On operating margin side, actually when we've looked at it, we feel like we've almost been too efficient. The reality is if you look back at 2020, we didn't really understand or know, and I guess you can blame me for it, that we didn't know how COVID was going to be. And so we basically took a little bit of a pause in March of 2020, just because we wanted to understand how that was going to roll out. And initially there was obviously some headwinds from that as certain SMBs and certain sectors got hit, but then a nice tailwind. And so we basically we're a little bit behind on investing given our growth, our TAM, and our opportunity. And so if anything, on our last earnings call, we also provide guidance that we're looking to target our call it negative 20% or more operating loss next year, mainly because we really want to invest in all areas. We're investing in product development, we're investing in sales and marketing to make sure that we go after everything we just talked about. And G&A is an area just because now we're as a public company, which is still a relatively small size to other public company, you also have a lot of costs related to that, but we think it's all worth it, obviously. And so when you factor all those in, I think that given the market opportunity and kind of how efficient we've been, we feel like now is the right time to actually accelerate the investment and make sure that we're not, sacrificing growth for that.
That makes sense. You hit on earlier something I want to go back to, which is just you mentioned 2 new product launches this year, and I'm just wondering if maybe you could provide some description of what those might look like. And I'm wondering if there are other use cases or tangential uses of your existing technology that you've seen that can also just kind of pull that conversation into other areas.
Yeah. So, obviously, like I said, we initially started out with product analytics. We have your user event data so you can understand how your product is being used by your users. We then launched 2 new complementary products. One we call Recommend, and the other one is Experiment. And to kind of shortly explain it, Recommend, think of that as almost like Netflix style recommendations. Because we have those users and we understand what users are doing, pretend if you're a financial institution like Wells Fargo. And Wells Fargo would be like, well, I want to serve different content to different users. Wong may be very interested in 529 because his kids are getting close to that age, right? Jason is like, no, my kids, he's trying to figure out how he saves so he can take a trip to Moab, And so you may want to serve different content to different people. And we see that obviously think about what you see on Netflix versus what I see are very different. Maybe, I don't know, I'm going to assume, and then the other one is what we call Experiment, and Experiment is just what it sounds like is A/B testing. It's actually fascinating when you think about how many companies out there today are still doing A/B testing using their own internal tools. Now, every time you do want to do an A/B test or an experiment, what do you want to do afterwards? Well, you want to analyze it. You want to understand whether it works or not work. And so it just seems like a really natural tie-in. In fact, it wasn't anything that brilliant our side. It was more of our customer going, hey, guys, this makes a lot of sense. Can you guys make it so that it's easier for us to experiment online and analyze, these different use cases of, this user doing this versus that. And so we launched out the Experiment product too. And so both of them got launched in Q2, and we're really excited about both of them.
couple of big picture questions to close on with the final 5 minutes. I mean, one that we've been just hearing more about is just the war for talent. Amplitude is clearly an engineering focused company in a lot of ways. I'm wondering if the direct listing, the brand recognition has helped, or how you would characterize your ability to stay on track and on target with hiring in this environment.
I absolutely think that they've helped, because I mean, prior to this year, I think Amplitude, like, you'd be hard pressed to find people that actually knew. I understood. I even for myself, to think about it only 2 years ago, I think to myself, like, I stay pretty up to speed on technology companies in the Bay Area and all the venture. And like, when I heard about it, I was like, what? And then all of a sudden you dig in, you're like, wow, that's very amazing. That's very impressive. And so I think just getting the word out there and being able to articulate what we do and getting it out, as a public company, definitely helps on that brand. But you're totally right. I mean, there's such a war for talent when it comes to how much software. Software is definitely eating up the world, so there's always that. But I think that there's also not many companies though that have kind of built their own proprietary database. And then that is also a challenge. So like, when you're looking for engineers, they obviously brand's important, but they're also looking for challenges that are like pretty tough and pretty unique. And there's nothing like, in my mind, think of like building your own database or dealing with customers that have billions of events and trying to figure out how do you leverage and utilize that to make product-led growth even better. And so I think our challenge is one that's also very fascinating to a lot of engineers.
Yeah, I mean, that's great. That's consistent. We actually had our own head of investment, and he mentioned the same thing. Our head of internal technology was saying the same thing, just around, you need to give engineers problems to solve. That's what they're focused on. At a certain point, that's really what's going to make the decision easier for them. So it's amazing. It's amazing how consistent that is. I guess
we have some fun challenge. So if you have anyone's out there listening, they're come on, let's help with the recruiting thing. Yes, please let us know.
Well played. I guess the final question is just the look forward, right? In terms of how you'll measure success over the next 3 years, what are some of the key metrics that you're focused on? And what drives success for Amplitude beyond this year, but further into the 2020s?
Well, I think it's the three metrics that we've been sharing, right? What's our revenue growth rate? We have a huge TAM, and so you got to be able to continue to grow at a pretty fast to kind of make sure that you're the winner in that market. I think obviously customer and like we're still at a pretty small number of customer count, and making sure that we continue to go outside of move into the early majority and thinking about other sectors and really becoming into some of those sectors and really penetrating them. So number of customers I think is really important. And then lastly is the net retention rate. I think it's not only the gaining customers, but how are they activating and adopting, and then how are they adding new products that we're building? Because ultimately, we're trying to target after that chief product officer, and what are all the things that he or she needs to be super successful in a product-led world. And so if they need experiment, great. They need recommendation, great. But they'll need more. And so I think that retention rate would be the third and last one. And so those three together will be how we measure our success.
Great note to close on. Long, appreciate the time. Thanks for joining us. Very much appreciate it.
Thank you, Michael. Really appreciate it.
Yep. Take care all. Thanks for joining.